Chancellor Rachel Revis delivered her review on spending yesterday in Parliament, confirming the budgets for various departments and projects for the next few years. My name is Jack Revis and welcome back to this week's episode of Tax Tidbits, where the spending review had some big news for businesses, and no, it's not just more paperwork. There's a whopping £120 billion being splashed on things like better transport links, more affordable homes, and a massive push for research and development. So all those wild ideas involving AI, flying taxis or robot baristas might actually get funding. There's also a big green light for Selswell C, the UK's first state-backed nuclear power station since shoulder pads were in fashion. In an effort to get more bang for its buck, the government is also handing out nearly £10 billion in business-friendly goodies like loans and investments. It's like Dragon's Den, but with fewer dramatic pauses and more spreadsheets. This money will boost the British Business Bank, not a monopoly spin-off despite the name, but the government's way of helping small and medium-sized businesses get the funding they need to grow. This should also give a leg up to Great British Energy, the government's new public energy company created to speed up investment in clean domestic energy. Additionally, a good chunk of this investment is aimed at getting more houses built, and new regional funding is going to help level up areas outside of London. Yes, the North and Midlands are finally getting their moment in the sun, or at least in the budget. And in a shocking twist, the government is planning to modernise itself. Cue the gasps. There's a £3.25 billion transformation fund to drag public services out of the Stone Age, plus £1.2 billion for cybersecurity upgrades and actual work in tech. Departments will also be cutting admin costs by 16% and finally doing that thing we've all been doing since lockdown, figuring out how to do more with less. So maybe, just maybe, the next time you deal with HMRC, it won't involve 3 weeks, 5 phone calls and a mild crisis. In other news, it turns out the UK's inflation rate published for April was a bit of a fib. It was reported as 3.5% when it should have been 3.4%. The Office for National Statistics blamed the Department for Transport for sending over some dodgy road tax numbers, basically overestimating how many people were paying road tax on new cars. While they have admitted to the mistake, they won't be amending the published inflation rate, as they only do so in special circumstances, and apparently 0.1% doesn't quite cut it. This hiccup comes as the ONS is already under fire for its data quality, and it seems recently that their figures might be more like educated guesses than statistical insights. For businesses, while that 0.1% doesn't sound like much, if you're sorting your budgets out, then it might be something to bear in mind. Scammers managed to nab a whopping £47 million from HMRC by pretending to be 100,000 unsuspecting taxpayers in a slick phishing scam. Basically the digital equivalent of dressing up in your nan's clothes and trying to claim her tax rebate. HMRC insists no actual customers lost money and says it's now locked down the compromised accounts. The crooks used stolen personal info to set up fake online tax accounts and sneakily claimed refunds, all while many of the real people had no clue they even had a HMRC login. Officials say they're working hard to outsmart the fraudsters, but the incident has raised big questions about the resilience of HMRC's digital systems. Meanwhile, businesses might need to start side-eyeing their own cyber defences, just in case if their next phishing email comes with a £47 million price tag. And that's it for this week's Tax Tidbits. If this episode gave you something to think about, don't forget to like, subscribe and tap that bell icon. See you next week.